This is the K-State Radio Network, and you're tuned to Agriculture Today. Thanks for joining us once more. We'll get caught up on the latest developments in the grain markets now, as we usually do on a Friday. And along with us is K-State Research and Extension grain market economist Dan O'Brien, once more from his office in Colby, Northwest Kansas. Well, let's begin on wheat since, well, there are many reasons for doing this, Dan. We have a harvest that's only a couple of weeks away from beginning in the state, and the wheat prices of the week are in retreat for the most part. Yesterday, a bit of stability, but they seem to be heading the wrong direction. What's happening?
Well, in the world market, there was a lot of, attention to news about Turkey working with Russia, who they're on friendly terms with, to be able to find a pathway to move wheat out of the Ukraine into world market channels. And the big issue behind that is that the world the world wheat trade and the world wheat overall supply demand wise really feels the effect of that the wedge now, I guess we call it, the void of the Ukraine crop not coming into world channels. Again, you're looking at an area that was referred to for decades and decades or longer as the breadbasket of Europe, that being Ukraine. So and it's become apparent that when you look at their supply demand numbers. Again, our colleague Antonio Braca has discussed that the issue of Ukraine having wheat in storage that it can't move, and quality concerns, et cetera. So all that is there, and so our wheat market was paying attention to that, and when I say our market in the U.S., it seems that some of the speculative forces that came in and helped to drive wheat up. And again, the July contract that ran up as high as about 1380, 1390, now dropped on yesterday's close down to 1143. So about $2.5 of drop. Some of that probably is just the sheer physical reality of Kansas wheat harvest coming in, even though that harvest will be reduced. It sure seems like, from what we're hearing, from what people would have hoped for. So anyway, we've had that price drop. The overall world wheat supply demand fundamentals is just tight. World minus China stocks projected by the USDA, even with expectations that about half of normal Ukraine wheat will make it into world channels, and that's probably a pretty heroic projection. Still down to 19.5%, and that compares to world minus China stocks use of 21.4 last year, and that was the lowest in about 10 or 12 years. So historic lows, very, very tight supply demand situation for wheat, and that's just supporting prices at levels that Eric, that you and I over the last 3 or 4, 5, 6 years prior to this would have just dreamed of. Couldn't have dreamed we'd be here, but we are. And cash prices, even after dropping $2.5 over the last couple of weeks, in Colby, Northwest Kansas, 1075 as a cash price, 1069 in Columbus, and those are the two lowest prices in the state for cash prices right now. Everything else, 1047 in Garden City, but then 1128, 1118, 1128 in Salina, Topeka, Hutchinson. By the time harvest actually happens, it's going to really be interesting to see what actually rules the day. Will the availability of some wheat supplies be at issue, or will there be a strong rush to go in and gobble up and get control of any supplies that are available? I would think Kansas farmers will need, probably. I wouldn't be surprised that they won't be that anxious to sell wheat right off the bat, because they read these same reports that we do, and they're very aware of that world situation. So I know where we stand right now prior to harvest, but it's going to be really interesting to see what this competitive arbitrage process will do in the next several weeks once harvest starts up, and people will be trying to buy wheat from the hands of sellers that in a lot of cases have 2/3, 3/4, hopefully, of their normal yields, and want to make sure they maximize price this year.
Could be a seller's market. That would be very important in this state for sure, for that to continue. On the row crop side, corn planting, well, you might be able to declare it now in broad terms a success. Certainly here in Kansas, but in the better part of the Corn Belt as well, right?
Well, that seems to be the case over the top 18 states in the U.S. for corn production. The last 5-year average, we would be about on this date about 87% planted, and 86 is where we were at in 2022 for the on May the 29th, and that was a few days ago. So and when you look at corn emergence, we're trailing a little bit more with that. 68% emerged as the 5-year average, and we're at 61. Really, the states we're most concerned about would be, well, North Dakota, basically, and North Dakota, Minnesota, South Dakota, and corn plantings in North Dakota, normally 83% done, projected on May the 29th at 56, and emergence at 7%, and 42 would be the 5-year average. So still concerns up in that part of the world and in some of those adjacent states. South Dakota trailing a little bit, Minnesota trailing some about 30%. So that's an issue. And that feed, I didn't mention for wheat that we have grave concerns about planting of the spring wheat crop up in there. And so here in the hard red area, when you look at the soil condition, crop prospects for hard red winter wheat out of Texas, Oklahoma, and Kansas, and then look up to the Dakotas for hard red spring wheat and white wheat right next door, heading into Montana and such. This would have been such a tremendous year to have great production, but we're just struggling in a lot of these major areas. But back on corn, where we've had some pretty healthy exports, and apparently ethanol use is holding up pretty well. So the demand side doing well, and apparently ethanol with encouragement from EPA and loosening of regulations, et cetera, as I understand them anyway. We're declining in stocks, and I think the U.S. economy, the U.S. government, is probably anxious to have ethanol come in and take the top off of where gasoline prices could go. And by the way, out in Western Kansas, we're well past $4 now and heading for $4.50 in terms of gas prices. So ethanol is in position to help that out in terms of having additional motor fuel supplies in the market, and that's one factor, frankly, supporting these strong corn prices at elevators. Lowest price at the places we watch, $7.15 in Salinas, $7.30 in Columbus, and that's down about a $1.50 or more from the highs that we'd had just a bit ago. I would say so. Here we're coming into June. Planting has happened. Seasonally, are we looking at a type of a situation we've seen in the past where we have strong corn prices on the new crop side, or during this period when we question how the crop's going to get in, or whether it will successfully get planted, and then is the market assuming that, well, it's going to be planted, we're going to have a great crop, et cetera. Well, we could be seeing some of that also. That said, still they have crop problems in Brazil, and you can see that in our exports. So even though we've had this decline, it sure seems that we have a lot of uncertainty to wrestle with from June through July and August before we declare that, hey, we're moving a whole lot lower into the harvest time frame.
Well, soybeans are definitely, Dan, being propped up by ongoing, very reliable soybean export business. China was again reportedly back in the market this week.
Purchasing.
And so with that and the fact that the soybean planting is in okay shape, it sounds, steady as she goes, at least on the soybean market, isn't it?
Nothing that you and I have talked about in past weeks has really changed in terms of the aggressiveness of forward purchasing. Again, we've got about 14, 15 weeks left in this marketing year, and the forward purchases for the rest of this year would take U.S. soybean total purchases above what the USDA has projected. So that puts you in a position to wonder at the next WASDE report, which I think will be on the 10th, a week from today. Will the USDA raise that export number again and tighten up stock? So that's their prices. Greg, talk about exports too quick. On the price side, we're still trading in that range, in a range of about 1750 on the top to about 1550 on the bottom side, and we closed yesterday at 1729. So we've been trading in that range since early March, and so I guess with the strength of demand and that shortfall that happened to a degree in the South American market, we're looking pretty good for soybean prices, and so and if anything, there are probably some states that I guess something around to say is that, will these high prices for soybeans and some of the shortfall we've seen for corn on the margin pull even a few more acres on the backside of this planting season into soybeans? And they really can't go to corn. A lot of these areas we've hit the crop insurance dates, so we don't have a lot of options. And if people do come out of the backside of their corn planting window, then their soybeans waiting with such tremendous prices and market opportunities that it would seem to be an opportunity.
Very well. Well, Dan again puts together copious notes on the grain markets for your review, producers, and we'd invite you to have a look at the latest edition on the agmanager.info website, agmanager.info. Dan, enjoy your weekend, and once again, we'll talk next week. Thank you.
Thanks, Eric. Take care.
From Colby, Northwest Kansas, Dan O'Brien, grain market economist with K-State Research and Extension, along with us each Friday here on Agriculture Today.